On this week's episode of the Crushing Debt Podcast, how to avoid self-sabotage. So welcome back to this week's episode of the Crushing Debt Podcast. My name is Shawn Yesner, owner and founder of Yesner Law. Welcome back, as always, your financial coach, George Corbello. How you doing, George?
Shawn, how you doing? I'm doing well. Got over the a little cold, a little bug during the holiday season here. Thanksgiving, all that good stuff. But recovered. Got some. It's funny. All you need is rest.
Yeah.
You throw a lot of drugs and things like that towards some of these sicknesses, but for me, it's like vitamin C and sleep. That's what my mother taught me. So that's what I did, and I'm feeling a lot better for sure.
It was rough getting back into the groove after Thanksgiving. I was able to sleep in a lot of the days.
Yeah.
I didn't have to get up early for BNI, and when I did, it was just on Zoom, so I could wake up
Oh, nice.
5 minutes before the meeting started. So it was tough to get back into the swing, but you know what helped me get back into the
Oh,
swing?
you're gonna tell me.
I'm gonna tell you that little green bottle, that
That
that Magic Mind bottle,
what a product.
helped me get right back into the swing of things. Helped keep me focused. Helped get me. It's we're now well into December, so what did we want to accomplish at the beginning of the year that we've got a month or less to finish up?
Right.
Plus, we got to buy presents for everybody. Plus, we got to set goals, which we'll talk about in a future episode. Setting goals for 2025.
Amazing. It's right around the corner.
So, but yeah, no, that Magic Mind. So unfortunately, the Black Friday special is over
Right.
by the time people are listening to this, but they can go back to the old code, which is, I think I'm going to find it here in a minute, but the old code is um, CD20, I believe.
Yes.
Yeah, magicmind.com/CD20. Gosh, sorry, Magic Mind. CD20, and that gets 20% off rather than the former Black Friday special. Still good to buy some Magic Mind as a stocking stuffer.
Absolutely. It's definitely one of those where if you need that pick me up without that crash, I think that's for me. I think that's an excellent gift for someone who's working hard and wanting to stay focused throughout the day.
Yeah, but definitely helped me get back into the swing of things after having so many days off. So, but we have a guest on this week's episode, and actually, it's kind of a throwback to what we pretty much what was the start of the podcast in general, the whole reason the podcast came to be. So our guest had it all: a successful family real estate business, a happy and healthy family. But unfortunately, as can happen to even the best of us, divorce, foreclosures, short sales, bankruptcies, all that stuff started to happen. It took him about a decade to fully turn it around. And he started rebuilding after the bankruptcy. He has redefined his career in real estate sales, investments, and consulting, maintained a near perfect credit rating, mended all of his relational struggles and financial struggles. He is the president and owner of Century 21 Signature Properties, one of the original Century 21 franchises in the country. And about 40% of the time, selling property is one way to avoid foreclosure. He's going to talk to us about some other ways that he's been able to help people avoid foreclosure. He's got his BA from the University of Massachusetts. So welcome our guest, Micheal Russell. Welcome, Micheal.
How are you, gentlemen? Grateful to be here. Thanks for having me.
Yeah. So, it's not often that we get a guest that wants to or talks openly about some of the struggles that they went through personally, but you've kind of used that. And I want to kind of jump right in the beginning to the Hope for Hardship. So the website is hopeforhardship.org. And again, any of these links, we'll publish all the social media links, all that kind of stuff. But I wanted to kind of start with Hope for Hardship because that really seems to be your main focus in terms of helping people that are in foreclosure or financial distress or whatever. Is that right?
That's 100% right. Yeah, I spend about 90% of my time working for my nonprofit, which is really born of, I through a real estate career, you see all the emotions of the human being, as they go travel through every type of real estate transaction. And what always resonated with me more Then say the first time home buyer, jubilation. I'm so excited we got our first home, or leveling up and getting that dream home. And what resonated with me more were the sad stories and the stories of struggle, death, divorce, disaster. Unfortunately in real estate, they're just associated quite a bit. And so I kind of worked every angle of it. I represented Freddie Mac for, from '08 to 2013. We probably sold 1,000 different foreclosed properties. And I would go down there and witness lockouts where the sheriff and a couple movers with a box truck would show up and knock on the door, and they would say, you have an hour to take everything you want. The movers will put it in the truck. When we're done, we're changing the locks, and they're out on the curb.
Yeesh.
I probably
Wow.
witnessed 300 of those, and that really resonated with me. And then I guess what really brought it all together, the glue that brought it together, was my own struggle with all of this. Self-sabotage defined a lot of horrible decisions uh, financially, which of course created collateral damage in my family that lasted the better part of a decade. And so these struggles are very real to me. I'm a firm believer that you can fake a lot of things in life, but the one thing you can't fake is shared struggle. And so
Well,
this
and
means, yeah,
it's interesting because one thing that I hear in what you're saying, and one thing that I sense out of you is something that I deal with, and I'm sure George you do
Yeah.
too, with a lot of the people that we talk to. And a lot of times what I have to say to a lot of my clients is, I think you're beating yourself up too much,
yeah,
which I think would apply to what I'm hearing from you as well. I mean, I totally get it. And like I said, I remember being back in the mortgage meltdown, which is, I assume, when you went through what you went through. And I remember people saying, we've got to stop foreclosures. We've got to stop foreclosures. And my response to that was, we're not going to stop foreclosures until we stop divorce, until we stop, one spouse dying, until we stop people losing their jobs, until we stop, really bad medical, if we cure cancer, maybe we'll stop foreclosures. But until a lot of that stuff, until we stop a lot of the causes, stopping foreclosure is like saying, I cut my arm off, I need to stop the bleeding. Well, yeah, but you need to repair that your arm got cut off. Just stopping the bleeding isn't really gonna help very much.
yeah. Foreclosure is a byproduct of so many different things. It's kind of the end result of, for me anyway, years of bad decisions. The human condition comes into play really with all this stuff, right? And I will tell you that in my experience, I have met far more people that could have stopped foreclosure with better decisions or prevented it than I
Right.
have true victims. And that is not to say that there aren't true victims in the world. There are, but I think there are far more people who made poor decisions in life who ended up with the byproduct of being foreclosed on, is my experience. And that's
Right.
just human condition, like along the lines of everything that you're saying, you can't stop the byproduct without stopping the behaviors that led to it.
Right.
So one of the things that I thought was interesting, one of the things that we talked about before we started recording, you sent me some statistics. Delaware, New Jersey, and South Carolina were among the states with the highest foreclosure rates in the first quarter of 2024. It was really interesting that Florida wasn't in there, because I think Florida was one of the kind of epicenters of the mortgage meltdown, which, we're only about 10 years beyond
Correct.
that period of time. Florida's was one of the epicenters, I think. So was, I think, California. I think New York was up there. So it's interesting that some of those states that were the biggest, had the highest foreclosure rates, are not up there anymore.
Yeah,
Um, and
Florida has a funny way historically of being the one that blows up the most in the boom time and crashes the worst. It does have that going for it, typically. So I would agree with you. I'm a little surprised myself. If you look at as Massachusetts as an example, in 2008, 9, 10, 11, during that horrible economic tragedy, there were on average 650 to 700 notices of intent to foreclose recorded in the state every week.
Wow.
Wow.
And today, that number averages in 2024 in Massachusetts at about 85. So I would say that we are at about the lowest percentage of foreclosure notices being issued in the state of Massachusetts than you can really ever see. They haven't really gotten much over 100 a week in the year 2024. So it's significantly down. And hey, you know, God willing, it doesn't get back to that 650, 700 range. But somehow or another, this country has a way of repeating itself one way or another, you know.
If you don't learn from your mistakes, you're doomed to
Sure.
repeat them.
Yeah.
Yeah, that's right. You know, and
So
yeah,
how does a foreclosure, something else we talked about, one of the differences here, Florida is what we call a judicial state, where Massachusetts, I think you said, is a non-judicial state.
sure.
So I know the difference, but you're the guest. I want to show you off. So what are the differences between judicial and non-judicial?
Sure. Well, a judge doesn't have to decide in Massachusetts. You know, they follow a pretty basic process of the lender has to notify the land court in the state of Massachusetts that they intend to foreclose for a default event, whatever that may be. Typically, it's non-payment. It could be non-payment of taxes, homeowners association fees, keeping the property insured, things like that. And then the bank has a relatively easy path to satisfying a foreclosure. They hire a law office who hires an auctioneer, and they schedule the auction. And that's where we try to come in between that case. Almost all times when we meet a client, and an attorney has already been hired by the bank to facilitate the foreclosure. And we try to get them back in the good graces with the bank through, there are only so many buckets when you're facing foreclosure. Any secured collateralized debt in this country, I don't care if it's a boat, a car, there are a couple inalienable truths. There isn't a bank in the country that wants to repo or foreclose, and there isn't an owner of a collateralized asset, a debt that wants to be foreclosed on or repoed on. Those are inalienable truths. So this work can be done nationwide. It is done nationwide. But every bank wants to offer assistance, and that assistance can come in two ways, two buckets: retention of the asset or non-retention assistance. Those are the two buckets that they'll offer. With mortgages, if you are out in the secondary market, you're backed by Freddie or Fannie, or you're an FHA type product, USDA, VA, the options are far more plentiful than if you are in a portfolioed loan where it's not sold out into the secondary market, because these government subsidized entities offer so many different assistance options for retention of the property. They really will offer multiple bites at the apple. So I have met and seen and dealt with people who have had multiple loan modifications, multiple partial claim mortgages, which is really, if I was going to say for a retention option, the thing that is most attractive to the people I work with is a partial claim mortgage. And in that instance, I've found that if you're less than, and this isn't guaranteed, but if you're less than about 300 days delinquent on your mortgage, the bank will entertain a partial claim where they take the arrearage, the past due amount, tack it onto the back end of the loan at 0% with no payments due, keep your current product intact as long as you are able to resume normal monthly payments in about 60 days. That is the best way to get assistance and remain in your home that's available in this country. And I work tirelessly, my team does, to try to get people qualified for those things. Because especially now, loan modifications to me right now are not a good thing. I meet most of the people I meet are in a mortgage product, a 30-year fixed mortgage product between 2.5% and 3.5%. When you do a modification, it actually adjusts the terms of the note. Not only will the bank try to add years to the maturity date, they will increase the rate to be in line with today's rate. So if you're at a 2.5, I just had this yesterday. Gentleman, elderly couple, adult kids living at home. They're carrying, they're doing their job for an extended period of time as a parent, right? And which is common right now.
Yeah.
Yeah.
Now they were at an $1,800 a month mortgage, taxes, insurance, all rolled in at 2.5%. The only thing the bank would do is modify the note, and their new payment is $3,815.
Eesh.
They offered to put them on a trial period modification for 7 months. And if they follow through with those 7 payments through next June, I asked the bank, I said, well, what if the rates go down in the fours by next June? Once the trial period, the temporary mod is over, will you relook at this product to be in line with the rates then? No, they won't. It stays at 6.65%. And they added 12 years onto the maturity date.
Wow.
So they had 18
And
years left.
how old are these clients?
67.
Wow.
So if there's 18
Yeah.
years left,
Right.
they'll be in their mid 80s by the time the loan pays off.
But if they accept this trial payment, if they turn it into a 30-year mortgage, roll the arrearage into it. So instead of a $387,000 principal, now it's a $459,000 interest bearing principal at 30 years at 6.65% at $3,000 plus dollars.
That's
Double
good. And
the
they'll be done paying it off when they're in their late 90s.
brutal. Yeah, it's brutal. And so I'm not a fan. I'm not a proponent of a loan modification. And as I'm sure
No.
you guys know, and maybe the world doesn't though, is the bank. Everyone wants an answer. Everyone that I talk to wants to know. Well, what will they do? What will they do? It's that I want to know what the future is bringing. And the reality is, until you go through the assistance application process, you don't know your options,
Right.
right?
Yeah. And, something interesting that you said before, and I've said this to clients, I don't know how many times I've had a consultation where the borrower is sitting across from me or on the phone or Zoom or whatever and says, the bank won't give me a loan modification or a workout or a whatever because they want my house.
Yeah.
I'm like, no, they really don't.
Yeah.
There isn't a bank in the country that wants to be in the real estate business. Not a
No.
single one.
So I thought that was interesting that you said that. And the other thing that's interesting, I know of the types of loan modifications that you're talking about. We're going to re-amortize it over 30 years. I've seen some banks re-amortize it over 40 years.
Yeah.
We're going to take we're going to adjust the interest rate. We're going to take what's owed and tack it onto the back of the loan. Here in Florida, I think we lump that all in as a quote mortgage modification, but it's nice to know taking the arrears and putting them on the back of the loan has a different name that may be able to help some of our clients get that type of a modification. So
it's a phenomenal
yeah.
setup. There's no
Yeah, especially because it leaves the interest rate in place. It leaves all that stuff in place.
And that second, it's kind of a silent second. And what you're seeing, what this really is in practice, is these are HUD backed loans. And so what'll happen is HUD will make the bank whole on the arrearage. HUD will stroke a check to the bank for $67,000, the arrearage, and now HUD holds essentially a silent second.
Yeah.
And that's what happens. And it's not due and payable. It's 0%, no payments due on the second. It's not due and payable until one of two events: the maturity of the original note, or you sell the asset. That's the only time it needs to be paid. And for someone that's 67 years old, this is an outstanding thing. Trying to be sensitive here, but it becomes your kid's problem.
Right.
You know what I mean? It allows you to stay, it allows you to maintain a reasonable mortgage payment, keep your living situation under control, and it can be dealt with the heirs, which
right.
And that would be an outstanding product for anybody in that situation, no matter your
Especially
age.
at that age, you want,
Yeah,
to be able to have to or worry about like what you're going to do for your kids when they're grown, where they're grown ups in their own right.
Yeah.
And managing some of these situations. So it's great to hear. Obviously, what I'm hearing too is there's options, and a lot
There's
of
always options.
So, but again, not a lot of people, a lot of people think it's like foreclosures the only option, or these things are the only thing I have available to me. So it sounds like, obviously you work with individuals to really understand exactly what are the options that are out there. Obviously
Yeah.
giving them that insight itself. But what are some of the things that you really want to, like, you hone in with when you're talking with some of, some of these folks
Sure.
itself that are going through that? And
Yeah. So go ahead.
what are some of the things that you feel, kind of work? Because everybody wants to, like, give me the secret sauce there, Michael.
Sure. So, all right. So the most valuable thing that my team and I provide is we are an emotional buffer, right?
Mhm.
So when you fall behind on your mortgage, it is a tremendously safe bet to say that you have countless other issues going on in your life
Right.
that have nothing to do with your finances. I've yet to meet someone who stopped making their mortgage payments and the rest of their life is root beer rivers and
Is
lollipop
okay.
trees,
Right.
right? And so that's the biggest value that I offer is my experience as a real estate broker for 30 years allows me to technically navigate these things and understand them. My personal experience going through this gives me the empathy I need. But the most valuable thing that I really provide to people is a lot of times the initial intake with a client will be a three-way phone call to the bank. And as much as I try to prep them and help them understand, listen, banks are just like everyone else, kind, charming, and cooperative is the goal here. Now, I've yet to meet someone who is pissed off at their bank and possibly pointing fingers. You know, this is a thing in this country, too many fingers, not enough thumbs.
Right.
Right?
Exactly. Love that.
And be able to maintain their emotions when the bank says, oh, we haven't received that, or there's a page missing on the bank statement. The P&L you provided is for 89 days, not 90. And
Right.
whatever countless number of things that these banks, these people in a cubicle sitting in Austin, Texas, who have no idea where Maple Street is in Dartmouth, Massachusetts, the disconnect between the consumer being able to control their emotions when communicating with the bank is intense. And as I'm sure everyone will understand this, if you're not particularly nice to someone on the phone who works for a bank, you kind of run out of options pretty quick.
Yeah.
Right.
If you are nice and calm and perhaps charming and use a little salesmanship, it's a lot easier. And so that's very easy to me. I'm not burdened by the past of these people and what they've been through. And so I don't carry that same emotion. I carry empathy, but I'm able to directly communicate with. And if I would say that so I operate off a basic service agreement, and that service agreement, I don't charge any money for this. This is relatively simple to me, so it's not hard for me. It's my honor to try to help people stay in their homes.
Sure.
But my service agreement just really all it does is it defines my duties and the client's duties, and all I ask of the client is be attentive, be proactive, be engaged. When I need supporting documentation, communicate, in a timely fashion. And I can tell you that these assistance applications, on average, take my team and I about 6 weeks. And I have yet to submit. I mean, maybe once, but it's very rare that no matter my experience and everything else, that I submit an application and I follow up and the bank says, "Yep, it's complete." There's
Yeah.
always something missing. And so part of the process of what we do is after the intake, we fill out the application, we create hardship letters, and we build a case that suggests to the bank that they are a viable bet, that they are likely to be able to resume their normal payments if they offer some assistance on this arrearage. And the most valuable thing we do is every 3 business days, we follow up with the bank and get a status update. And in my experience, most people that I talk to have tried this before. And I often hear things like, well, no, we did that and they never got back to us. And people forget, I think people, there's some denial involved here. Let's be real. There's some denial about what's really going on, and that they think the mortgage fairy is going to come fix this or whatever it is. And it's not the bank's job to chase you, it's your job to chase the bank.
Right.
And that's where the rubber meets the road with us, is we understand that. And every 3 business days, after every document submitted or during the review process, we follow up with the bank. Hey, I'm just touching base, see what the status is on this. Are the missing documentation have they been approved? All we're trying to do is something that I called certified complete. When you are requesting assistance from a lender that has collateralized obligations, you want to get the assistance package to a place where they certify it complete, because once they certify it complete, they will put you under review, which simply means they will send the complete package to their underwriting department. It'll be under review, and once that loan is under review for assistance, they will pause further foreclosure proceeding steps. And that's the goal, is to get them to that temporary pause where I don't have to live in fear and they don't have to live in fear that an auction date is going to be scheduled. Yeah. Once an auction date is scheduled, options lessen. And what I found is about 38 days. If you can get a completed application recognized and certified complete in the hands of a lender in America, 38 days prior to any scheduled auction date, you have a chance of saving, a much better chance. Anything less than 38 days, and all of a sudden you start running out of options.
Yeah, and even in states like Florida, where we're judicial, it's the same kind of thing. I mean, if I go to a judge 15 days before a foreclosure sale and I say, Judge, we've got the full package submitted, please stop the foreclosure sale, but this is a foreclosure that is 5 years old, 4 years old, the judge is probably going to say, no, I want this thing off my desk. I want this thing off the docket. I'm only going to stop the sale if the bank agrees. And then the bank will stand up and say, well, we want this package, more than 30 days prior to the foreclosure sale so that we have time to review it. So no, we're not going to stop it either. So even in those judicial versus non-judicial states, I still find that time frame to be true. I mean, if we can get it in 38 days before the sale, but if we can get it in at the very beginning of the foreclosure, a foreclosure in Florida, we're still taking 9 months, 12 months, 15 months, somewhere in that range. So if I can get the loan modification package or workout package or whatever it is we're trying to do, the earlier I can get it in the hands of the bank and have them tell me they've got it, the better chance. You reminded me of a story where that's one of the most frustrating things, is that the bank will say, well, we didn't get this page. And I'll say, well, you got the page before, you got the page after, you didn't get that page that was in the middle. Right. And so one time they told me we didn't get the whatever document. So I sent it again. We followed up. We didn't get the whatever, the same document. So I sent it again. After the third time, I said, you know what? I told my staff, send in the full package to the bank every half hour on the half hour. Eventually, I got a call back from the bank saying, we got your package. Stop sending it to us. And I said, well, thank you for telling me you got it.
Yeah. I got a similar one the other day. I don't know, Monday or Tuesday or something. I was talking to a bank and there was some missing documentation. They needed proof of occupancy, right? I said, okay, what are your acceptable, forms of proof of occupancy? Utility bill, tax bill, whatever. And he said, bank statement. I said, are you serious? And I said, I sent you 3. You just told me you got them. He's like, oh no, we'll take the first page of one and write POO on it. So literally the bank told me to write POO, proof of occupancy, on the front page of a bank. We're dying in here. We're rolling when we're listening to this guy on speakerphone. But listen, man, and this is the kind of stuff that a consumer who is riddled with fear. I have yet to meet a consumer who believes that the actual person chasing them is who can solve their problem. They believe that that person is the enemy, which is precisely why I walk into dining rooms all over the place and see 2 years of unopened mail sitting on dining room tables. Because it's hard to believe when you're riddled with fear that the solutions to your problem are actually coming from the person who is the problem.
Yeah.
Right.
The lender is the solution. Every single outbound service, whether it be Massachusetts, half, during COVID, every state got a couple $2 billion in homeowners assistance fund. And back then we were doing great. We were getting $50,000 in arrearage paid by this fund. All those programs in Mass are out of money. The only state program that still exists is called RAFT, and they'll pay a maximum of $7,000 to a mortgage company to solve these issues. The solutions lie within the bank. Pick up the
Yeah.
phone and keep active lines of communication open with your bank, but people are deathly afraid, and so they don't want to talk to the bank, which I totally understand. When I was in hock to 50 different creditors, I stopped answering my phone.
Yeah.
I didn't
It's
want to
people.
talk to
Burying
American
their heads.
Express or Chase or any of these leasing companies, whatever it was. And when I went through this, that's a big reason why I do this stuff, guys. That's why it's so important to me. Is I wouldn't be here if not for the turnaround in my own life. And what keeps me here is to play a small role in and witness the turnaround in others' lives. That is tremendously rewarding to me. For a long time in my life, look, I think we all come into people's lives and we interrupt their lifeline in some way or another. And for a long time, I would enter someone's lifeline and create or cause a negative trajectory moving forward. And I don't do that anymore. I pride myself on coming into people's lives and
Making
becoming
that.
an inflection point that helps create a positive trajectory from that point on. And that's why this means the world to me.
Yeah, I've always said I know that I've done a good consultation when the client says, "Thank you, I can sleep tonight," or
Right.
"Thank
Yeah,
you, I feel like the weight's been lifted off my
sure.
shoulders." I did want to talk real quick because you also
Yeah.
mentioned a couple other options here, so I wanted to touch on them real quick because I know what I think of them, but I'm curious to get your thoughts. Forbearance plans and short sales. I mean, I think short sales are really good, but again, here in Florida, I'm not seeing very many short sales because for the most part, the properties are maintaining their equity or even slightly increasing their equity. So at least here in Florida, short sales have fallen off a little bit.
Absolutely.
Forbearances, I'll let you explain why forbearances are terrible.
I hate forbearance. I hate forbearance, right? It is the successful lulling into a false sense of security of the consumer is what it is. And it sounds phenomenal. Like if anyone had ever called me without any kind of experience or know-how and said, "Hey, listen, we understand. You don't have to make your payments for 6 months. It's fine. It's on us." Because that's what the consumer hears. That is not
Right.
at all what they
No.
said,
A break.
but that is what the consumer hears. And the reality is, I've had multiple people do forbearance agreements this year, and they did forbearance agreements, and had the summer of George, and loved their life for a while. And then when September 1st came around, the fine print said $17,836 is due. All those payments that we forbeared are now due and payable on this date. Miss that date and you are back in foreclosure. So I am not a proponent of forbearance. I did a forbearance agreement. My father did on a commercial building that we owned in 2009 or 10. And, cash flow had shrunk significantly. And so we needed help and didn't understand what we were entering into. But I knew that it was a cross collateralized note over two commercial properties with a Spanish bank, and they offered a forbearance where the mortgage payment went from $9,900 a month down to $4,200. And at the time, we said, "Yeah, sold." Signed the documentation, paid the closing cost fees, didn't even really understand it. Crazy to be in the business and not understand. I didn't, of course. I was younger, 26 or something, and the 200-page pack that my father sat there and signed was a new mortgage, and that mortgage now matured in 2 years instead of in 25 years. And what happened is, by the time that mortgage, it was $568,476, and I'll never forget it. By the time that note matured 2 years later, the value of the assets was maybe 60% of what that balance was. There was no ability to refi, and the bank forced a foreclosure.
Wow.
So yeah, I got a special. You reminded me how special a part I have in my heart for that forbearance. I hate them. Short
Yeah.
sales, on the other hand, I listen. They are a great tool, but right now it's just not a tool available. For the first time in the history of real estate, in my opinion, you can. I'm not recommending this. You cannot pay your mortgage for 3 years, sell your house, and walk away with a bag. We do it on
Yeah.
a regular basis. We have a woman out of Woburn who hadn't paid her mortgage in 3 years, sold her house and got $186,000 at the table, more money than she had ever had in her life. And that's because of the unreasonable, if that's the right word, unreasonable appreciation in values. This isn't real. It never is. But because values have increased and appreciated so much, it's entirely possible to not pay your mortgage for 2 or 3 years, still sell your house and walk away with a bag.
Yeah.
Jeez.
It is.
Now the flip side to that coin, however, is if she had made the payments for 3 years and then sold
Yes.
the house, she would have walked away with a lot more money.
Right.
Question about it. Absolutely right. There'd be no fees. There'd be no default interest. There'd be no attorney fees. All that stuff wouldn't get passed on to the payoff. But it is, I've never seen it in my life. We've probably sold 1,000, 1,200 short sales. It was the vast majority of our business when we were working with Freddie Mac, and everything else was a short sale. I think that, look, there are two horrible things that can happen to your credit report in America, and they are public records, both of them. One is bankruptcy and one is foreclosure. And I say horrible, look, they are tools afforded to us, and sometimes they have a role. But I did both. I got foreclosed on and I filed bankruptcy, both corporate and personal. And I can tell you that the years following those bankruptcy filings, I buried myself in a hole until I was bankable again. And those were horrible decisions on my part. But bankruptcy it feels to a lot of people, because of course this would be Chapter 13, and I can't speak to this anywhere near as much as you, but most of these people with collateralized debt file Chapter 13, which is a cure and maintain platform. And what they don't understand, and the bankruptcy attorneys, at least in my area, that harp on these people once the notice of intent to foreclose is, they are less than high on my list. Right. And they often come across to me as someone seeking to capitalize on what they perceive to be someone else's misfortune, because I personally believe that you got to try everything before you file bankruptcy. And I mean everything.
Yeah.
Now, the short-term value of a bankruptcy when you're facing foreclosure is it'll put a stay on the foreclosure. What people fail to understand, in my experience, is that cure and maintain platform's coming pretty quick. And when it does, you are going to be not only expected, but held to make your normal mortgage payment plus a payment to the U.S. trustee on a 3 or a 5-year plan, make them both. And most people that I meet, if you couldn't make your mortgage payment, the idea that you're now going to be able to make your mortgage payment and the cure and maintain payment, I got a special place in my heart for some of these guys too. I think you should.
So I will say, and I don't know if I'm defending myself or defending every other attorney out there. I do say to the clients, we go through all the options, and here's how a modification might work, and here's how a short sale might work, and here's how this or that or the other, and here's how a bankruptcy works. And I always do, a lot of times I do tell the clients, look, bankruptcy is something we can keep in our back pocket for if or when we need it, if any of these other options don't work. The other thing that I think Florida has done really well, we have a mortgage modification process within the Chapter 13 bankruptcy. And so I think we can go into a bankruptcy, and certainly I'm working on a client right now where the bankruptcy plan is one of these cure and pay, where we're paying the mortgage payment and we're paying a little bit more to catch it up. But the client is telling me that she can afford to do that, where there are other Chapter 13 plans that we can suggest here in Florida that say we're going to modify our mortgage, and we've got to file that motion within a certain period of time of filing the bankruptcy case itself. But then we work with the bank on the modification. And a lot of times that can be our second bite at the apple for the modification, our third, our fourth, our fifth. I've had modifications approved in bankruptcy court that were denied while we were in the state court process. Part of the reason is because the unsecured debts are getting paid for less than what's owed. So there's more disposable income to fund the modification. So again, I don't know if I'm defending myself or every attorney out there.
what
but
you're
there are
saying is
different possibilities.
Cross examination.
Yeah, there you go.
tremendously valuable, honestly. And I'm pumped that we've met because I am always on the hunt for bankruptcy attorneys I can trust. I have a very short list of them. And the ones that I'm speaking, I mean, really, right? It is what it is. I do have a
Right.
very short list, and I'm pumped to meet you. You know, and I have two here in Massachusetts. One of them is the one who did my corporate and my personal bankruptcy, who often tells me, "Shut up, you know just enough to be dangerous."
Right.
Okay, and, and so I'm slowly taking that advice. But the reality is that look, when it becomes public knowledge that someone is facing foreclosure, part of the struggle that I face is that there are a litany of people and entities who harp down upon these people.
Yeah.
And I understand it. It's a business model. I don't possess any judgment in
Right.
my mind, but it makes my job harder. And I am a stalwart believer in the fact that I'm the only guy on the street that does this for free. I'm the only one. And this is largely
would agree
tied
with
to
that.
my own story. Yeah, this is largely tied to my own story of struggle.
Right.
And, you know, my life over the last 8 years has been one of recovery, and I pay it forward to the next man or woman. And I
So
don't, go ahead.
sorry, is Hope for Hardship, you said it's a nonprofit. I
Yes.
assume it's nationwide. It can,
That's right.
you can help people nationwide.
That's absolutely right. Yeah.
Okay.
That's
And again, it's hope for the number four, hopeforhardship.org is the website for anyone interested. And again, I'll publish all that in the notes with the website links, the LinkedIn links, the Facebook links, all that kind of stuff. I'll put that all in the notes.
It's awesome, man. I love what you guys are doing, man. You know, we just met, but didn't take me long in the beginning here where we were just kind of chopping it up to realize that you guys got something good going on. So I'm grateful for the work you guys do.
George is okay. I'm an attorney, but George is okay.
Listen, man, everyone needs an
Yeah.
attorney. You know, it is what it is. You know.
Yep.
So anything we might have missed? Any other questions or anything you want to talk about?
I'm no, yeah, tell me a little bit about what you guys do. So George is a financial consultant. Is that what you said?
Yeah, financial coach, financial consultant, obviously helping people. It's beyond the numbers, right? So we always think it's the numbers, the budget that really holds people back, right? But in these instances, it's really, you know, what are some of the behaviors, the mindsets that seem to keep us where we are when it comes to our finances? Because a lot of times, you know, it's always the lifestyle. For me, I always tell people, we want the lifestyle that's well above the salary that we bring home, the income that we bring home. So it's resetting some of the way we think, and really putting a plan together to kind of get them moving forward, to be able to achieve the goals that they may have set with their money if they've never set them. Hopefully, establishing those, but obviously having a plan that allows them to be a lot more in control with their money, and that's kind of where I help out with. Obviously, you know, some people feel like they're at, you know, the foreclosure and bankruptcy, and like those seem to be the first options. I try to help them to kind of like, okay, well, let's level set, you know, financial literacy, put a plan together, and to see if that's an actual, you know, option at this point. Because a lot of people we dramatize things. We jump to we always look at foreclosures and bankruptcy as the, you know, so, well, this is it. This is all I got. I got to jump to a solution. And sometimes there's some hard work that goes before that.
Yeah.
Well, that's like we talked about. You know, it's you can't fix the byproduct without fixing the thinking that got you there in the first place. You know, and I think the American society is one of, you know, still keeping up with the Joneses, and you know, social media exploded that to the umpth degree. And I think that a lot of these things are basic human condition, true self versus false self realities. And that was certainly my situation, is I tried to live a life that was really a false self. I cared about what everybody else thought. I wanted to broadcast everything I did that I thought may make someone else jealous. And I lived a lifestyle that that exuded those kinds of things. And it got me in a place, got me precisely where I deserved to be. And so, you know, that whole consultation thing, financial fiduciary responsibility, or financial responsibility is huge. I think that
Yeah.
it's not as hard as I used to think it was to live within my means, to get my credit back to a good place, to be bankable in the eyes of any traditional bank, and to make the right decisions. What I had to do in order to do that was change myself, my
Yes.
expectations, and my beliefs.
That's it. And that's where I help a lot of my clients is really sometimes we
Hard
think
work.
we don't know what those are. And a lot of times it's really more of just honing in on that because sometimes we forget.
Yeah.
And it's really, because we're so stressed with the day to day and they got to make the money, got to do these kind of things. It's
Yeah.
just reminding folks to like, hey, slow down. Let's reestablish what you already know. It's just now, maybe believing in what you know. So that's a good thing as well.
Yeah.
I blame Robin Leach. It was you know what I mean? When I was a toddler and I would watch that show, I thought, well, if they can have it, I can have
Absolutely.
Well, that is true to an extent,
it.
although
You gotta
you
earn
can
it.
have it. You just don't
Yeah.
want to finance it all.
Yeah,
Yeah.
exactly. You got to work for it a little bit.
That's right.
That's what I would recommend for sure.
Yeah. If you have to know how much it is a month, you can't afford it.
Exactly. Well, thank you, Micheal. I really appreciate you being a guest on this week's show. Again, we'll post the link, which is Hope for Hardship, the number 4, hopeforhardship.org. We do also need to mention again, Magic Mind, our friends, our sponsors.
Yes.
Again, the code is magicmind.com/CD20 for 20% off any order of Magic Mind. We use it. We love it. I got to take mine today, as a matter of fact, and knock out the rest of my day. We also want to mention, if you want to help support us, you can go to patreon.com/crushingdebt. That'll help support us and the show, or support the show. All the money we get there will go back into the show. Again, our friend and sponsor, Sam Cohen with Attorneys First Insurance. If you're an attorney or a title company and you need malpractice coverage, E&O coverage, call Sam or contact Sam at attorneysfirst.com. I think that's it.
That's it. Great show.
I'm checking out your Magic Mind right now.
Nice.
Oh, very cool.
Yeah,
They will love that.
I'm on it.
Thank you.
Happy to do it, man. Anybody can me directly, 508-501-9214. You call that number. That's my cell. Anyone, anywhere, anytime. If you need some help, I'm here.
Nice. We will publish that as well. Thank you, Micheal, again for being a guest on this week's show. We'll end it like we always do, which is that we hope you have more money at the end of the month rather than month at the end of the money. And we will talk to you in next week's episode of the Crushing Debt podcast.
Beautiful. Thank you.